You invest with central banks, life is much easier. Play against them, this is a very hard job.
2022 was not an easy year in the investment industry. We had a lot of talking points, a lot of pressure, especially for European equities. And that's what we want to talk today with Lars Schickentanz from Anima in Italy. Hello, Lars. How are you doing?
Hi, very fine. Hello to everyone.
Yeah, we had a tough last year, or a tough year 2022. What's your outlook for the next year? Will it be similar? And especially on the inflationary side, would you say the inflation will be high next year again?
Well, inflation has, of course, been the topic over the last 18 months or so. I suspect we are at the peak, and inflation should decline next year. So I would expect the market's focus more move towards the recession and the impacts of that. But coming back to inflation, I'd say if we divide inflation a little bit, what is good, what is bad, I think we have now had an energy bear market and a commodity bear market for quite some time. A lot of the extra effects of the Russian-Ukraine fall have washed through the system, washed out. So a lot of these things are moving out of the system and become sort of a headwind for inflation, so better inflation data for the market going forward. I suspect if I look sort of at service and wages in Europe, that is a little bit more sticky. This could be a slightly more endurable, slightly more sticky to come down. And what I wouldn't expect to come down are simply the effects of the green policy, i.e. changing our world and all the costs that is associated to that. What do I want to say? So yes, inflation will come down, but over the course of next year, it will be important for the market to understand at what level inflation will bottom this cycle, right? And that is a question where we have, as of today, no answer about.
Talking about inflation always means talking about central banks. What kind of impact has the changing monetary policy on your portfolio?
Well, of course, central bank policy or liquidity conditions is one of the key ingredients for any absolute return strategy, because if liquidity in markets is rising or is falling, and the reasons for that are very important to understand which style, which sectors, which areas of the market should do well, and if this ultimately is good or bad, if this leads to recession or whatever. So it is one of the most important questions. As of today, we still see liquidity conditions tightening. We still have in Europe also the ECB, still more work to be done, and also maybe QT in Europe having more of its effect in the first half. So I think, therefore, for us, this is always the key question to judge. You invest with central banks, life is much easier. Play against them, this is a very hard job.
You have a long-short fund. Does this kind of have an advantage in the current environment to also have the opportunity to short stocks?
It is, of course, a great additional tool. So first of all, flexibility is one of the key ingredients. We've seen the cycles getting shorter and shorter, at least in the recent period, more sort of a boom-bust experience in terms of markets and inflation and economy. So having such a product or having instruments to deal with it is, of course, of great help. One would also hope that potentially exploiting the opportunities between various styles and sectors from a long-short perspective in the various liquidity regimes should be helpful. And of course, if markets come down, one would hope that shorting equities will yield also absolute gain. So it should be an advantage.
We're going kind of close to the end of the year. What is, in your opinion, or what can be, in your opinion, the catalysts for the next couple of months having the biggest impact on your portfolio?
We just had a very big rally, and we suspect from here the risk reward is negative over the next couple of months. So we think the market moves from inflation to central bank action now in the first half to recession and the effects on the real economy, on profits, etc., etc. So we think this is sort of the last leg in this equity bear market, but it could still there could be still substantial losses ahead of us in the first half of next year. After that, of course, focus will shift more towards central bank cutting rates from the second half of the year into 2024. So the outlook overall for the year is basically from these levels, it's a wash, but with a bad first half and a better second half.
So a tough year 2022 and maybe a tough start into the next year, says Lars Schickentanz from Anima. Thanks for your insights, Lars.
Thank you very much. Thanks to everyone.